Equity markets have been volatile. What's the outlook on the way forward? I have with me Amit Jain, Senior Portfolio Manager with Kotak Mahindra Asset Management Singapore Private Limited. Hi Amit, and I want to start off with a big event that transpired, the US Fed, yet another status quo on the interest rate. What's your reading and what do you expect the Fed could do from here on?
Thanks for the question. If you look at the Fed, it has signaled that it will probably look to cut rates in September. Bond markets are pricing in almost three rate cuts this year. And what it means for India is that even the Indian central bank will look to cut rates as somewhat towards the end of the fiscal year. And we expect a total cut of about 100 basis points by the end of the next calendar year.
We saw global equity markets move higher. In India, the markets moved to record highs. But once again, there's been a bit of volatility that has come in. What do you think are the factors behind this move?
If you look at Indian markets, you've seen a strong rally so far, and after a strong rally, a healthy correction is always good. If you look at the global markets, right, you're seeing sort of the AI trade. There's some fatigue in that, and there are global geopolitical tensions happening in the Middle East. So there's some sort of correction which is emerging from that as well. And I guess that's what's even driving, foreigners to sort of sell India as well, given that, you've made decent profits here. And at this point in time, it's obviously, not unusual to see foreigners sort of book profits or reduce exposure in equity markets.
How would you justify India's premium valuations?
Yeah, so if you look at Indian markets, right, Nifty, which is the large cap index for the country, is trading at a slight premium to its 10-year average. But however, if you look at versus emerging markets, it's at a significant premium. Now, there are some reasons why that is the case. If you look at India's risk premium versus the global markets has been coming down. This is exhibited by the yield gap difference that exists between US and India. What drives this is basically strong forex reserves and better inflation differential versus the Western world. Secondly, if you look at Indian corporates, they have delevered their balance sheets over the last decade and are now at their least leverage levels over the last 10 years. Even if you look at banks, they have increased their tier one capital to their highest level as seen in the past 2 decades. Now, what this sets up India for is a very strong growth, not only for the next couple of years, but for the next decade or so. India has also been compounding earnings at a faster clip versus the Western world over longer periods of time, and that is likely to continue. And despite such lower leverage, India's ROE is trending up to 17% as against emerging markets, which are about 11 to 12%. And it's even India's ROE, despite the 17%, is likely to inch up further towards the 19 to 20% mark. If you look at Indian markets, they're very diversified sectorally, as against some other emerging markets, which have primarily a play on a particular commodity or the tech trade. Now, even if you look at the US, if you exclude this Magnificent Seven and you look at the S&P sans those seven stocks, the earnings have not been growing over the last couple of years. However, in India specifically, if you look at the mid and small cap names, they've been growing earnings at a much faster clip than the larger counterparts. And finally, you have the domestic flows in the country. You might call this the Indian 401k equivalent of the US, but Indian household savings are roughly about $700 billion, and their exposure towards equity is been going up steadily. And what they have done is over the last 3.5 years, they've bought close to $100 billion of Indian equity markets. What this does is it's very supportive of valuations, and at the same time, it reduces the volatility in the market, as you can see in the past few days.
With the budget and the announcement, and of course the few first quarter of FY25 corporate earnings that have been released, would you like to give your sectoral allocations a relook or perhaps change your preferences sectorally?
So, there was a fear among the investors that given the election results, the government would look to spend more on handouts to appease the vote bank. However, what we saw in the particular budget was that the government was firmly focused on capex and increasing job creation in the country. The increased dividend from the RBI that the government received was used to reduce its fiscal deficit and partly spent on increasing job creation. As of now, we are not looking to change our sector allocation driven by the budget. We continue to remain focused on bottom-up stock picking. If you look at the earnings season that's happening at this point in time, the results are broadly in line with expectation. earnings growth are in the mid-teens range, and our expectation is that that's going to continue over the next couple of years as well.
We've seen FIIs selling Indian stocks, particularly after the budget. What's poking them, according to you?
So apart from the global events that we spoke of, if you look at one of the big negatives in the budget was the increased taxation on both short-term capital gains, which was moved from 15% to 20%, and on long-term capital gains, which was moved from 10 to 12.5. This does reduce the attractiveness of the Indian market in the eyes of the foreign investors. However, as highlighted earlier, India provides a diversified set of growth stocks with attractive returns on capital to ride on. And it is our belief that long-term investors will continue to find investing into India a compelling one. And we expect the government to provide a stable tax regime going forward.
And finally, how would you recommend foreign investors approach Indian equities?
So I think India remains a growth market. The risk of investing into India have been blunted, and I would recommend investors to use the current bout of volatility to invest into the Indian story.
Thank you so much, Amit, for sharing all of those insights. And thank you, viewers, for tuning in. Stay tuned to Kotak International.